And major global companies consider India as the third most favored destination after China and the United States. This is the findings of a UN report. According to the report by United Nations Conference on Trade and Development, or the UNCTAD, investment inflows in India could increase by more than 20% both this year and the next. A report.
Good news for the Indian economy. According to UNCTAD, or United Nations Conference on Trade and Development, FDI outlook for India remains optimistic. The country had an inflow of FDI worth $32 billion in 2011, and in 2012 it could be between $42 to $45 billion.
The FDI outlook looks promising. The report says that the momentum which was there in the last year, which reflected 33% jump, continues to be there in 2012. So India is doing much better in terms of growth.
Globally, foreign direct investment inflows rose 16% in 2011, surpassing the 2005 to 2007 pre-crisis level for the first time, despite global financial and economic crisis. The report says that developing economies continue to account for nearly half the global FDI flows in 2011. But foreign direct investment may lose momentum in 2012, though prospects for 2013 and 14 are cautiously optimistic. Meanwhile, UNCTAD said that FDI inflows won't be affected in India due to issues such as GAR provisions and Vodafone tax case.
GAR is only relating to portfolio investments, so it doesn't affect FDI picture at all. About Vodafone tax deal, it has received a lot of media attention, but I don't think any serious investor who is looking at India for what India offers in terms of market and business prospects will be deterred by that.
The news might bring cheers to the Indian economy, with the rupee under pressure due to risk-averse investors, mounting current account deficit and import-induced inflation.
So despite doom and gloom, there is some good news. According to UNCTAD, India remains an emerging market darling and will continue to see good FDI inflows in coming years. Sidhant, Sibal, DD News, New Delhi.
And Deputy Chairman of Planning Commission Montek Singh Ahluwalia today said that the GDP growth rate for the 12th five-year plan is expected to be between 8 to 8.5% instead of the earlier target of 9%, looking at the current slowdown and global uncertainties. Speaking to reporters on the sidelines of a function in the capital, Dr. Ahluwalia said that the growth target for the current year is expected to be 6.5 to 7%. When asked about the finalization of the 12th plan, Dr. Ahluwalia said the National Development Council, or the NDC, meeting will take place sometime in September, and that is the time by when the Planning Commission expects the plan to be approved.
I think given that the world economy deteriorated very sharply over the last year,
yes, sir.
And I think the growth rate in the first year of the 9th plan has to be somewhere between 6.5% and 7%.
Yes, sir.
It is not possible to think of an average of 9%, but this is the view that the Planning Commission has to take. Yes. I think somewhere between 8 and 8.5 is feasible, but you know, when I say feasible, even that will require major effort.
Speaking on the poverty front, the Planning Commission chairperson said that it is looking at a poverty reduction of about 10% for the whole of 12th plan period, with a reduction of 2% annually. Further adding to that, Montek Singh Ahluwalia said keeping inflation level at 5% would be the desired objective of the government. Ahluwalia also expects the agriculture sector to grow at 4%, similar to the previous fiscal.
I believe that, you know, we will certainly target a substantial reduction.
Yes, sir.
We need a little more work to get to that, but last time we had said a 10 percentage point increase.
Yeah.
I think somewhere between 10 and 12, 10% is a pretty good, because it means a 2 percentage point decline every year during the 12th plan.
And with that, it's time to slip into a quick commercial break. When we return, we'll get you more business news. Stay tuned.